Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you're all having a great day. Uh, what I want to talk about in today's video, maybe just something that's kind of been on my radar for a while. This is something that we actually spent some time going over in this past Monday's option session, and it's just kind of a conversation about the metals, all right? So gold and silver specifically, and it's really been a focus of ours for the last few months. I mean, obviously the performance has been fantastic, and it kind of came onto the radar after this June move here. So it was one of those scenarios where it was enough to make it interesting, but not enough to really get us involved. And then when it had the massive breakout on volume through 130, that was really like the point where it was like it triggered like a significant significant multi-year resistance range breakout, right? And that's really once things started to take shape. So you can, if I go back far, you can see. So that's really when things started to take shape. Caught a lot of people's attention, and the option volume was great. The volume in the ETF has been fantastic. Performance has been great. So it's one of those trades where nobody had any interest in it really until it triggered the breakout, and then once it triggered the breakout, it's everybody wants to be involved. So, I mean, as you can see, just great action. The Fed meeting and the combination of the tariff tweet at the end of July, beginning of August, created the next leg higher. And after like the 10% measured move, actually greater than 10% measured move into the low 140s, it's finally paused, right? So it's not a bad thing. It's due. I mean, after the move it's had, a little bit of a pause and a pullback is certainly healthy. I mean, it allows for the overbought conditions to kind of work their way out of the ETF. I would say a very steady, very orderly pullback. Yes, it has traded through the 20-day, and you can see the 20-day and the 8 EMA were kind of critical levels during that real aggressive uptrend. So it has broken below both, right? But it is above the 50-day. So there are positive signs. It's at a pullback. It would needed a pullback. It had a huge move, and this is a very orderly pullback. And what you'll notice is that right here, like the volume profile, right, has been lower than what you would what you would see at the beginning of August when it was having like those massive surges. So the volume pullback, the pullback has been on lighter volume overall, very methodical, very orderly. It's hanging above 140, and it still looks encouraging. So I like using the weekly chart sometimes. You can see that the 8 EMA weekly actually is a pretty key area, and it's holding, and that actually is sitting right around 140. So it's holding 140. It's holding that 8 weekly, and going out to a longer term perspective, you can see that there's still plenty of room up from here. So 160s right here. It's kind of like the 150s to 160s. I mean, 160 probably be the more aggressive of the two. Like the low to mid 150s, maybe a little bit more achievable in the near term because that would like backtest the 2011, 12, 13 support range. All right, so it does seem like there's still upside. It's holding where it needs to. Now the time frame is going to be key, right? For options, it comes down to the time frame. And while it was in this really aggressive trend and holding these fast moving averages, the 8 and the 20, you could look for shorter term options because the moves were developing a lot quicker. It was in a real aggressive trend. It would have fast, quick moves when it triggered these breakouts and just extend, right? It triggered a breakout, extend, triggered a breakout, extend. But now that it's pulled back through these momentum moving averages, I feel like the next leg up would probably take a little bit more time. So I feel like instead of like that 1 month time frame, the 2 month time frame for options probably a little bit more interesting, more attractive, or even like 3 months, just to make sure you give yourself enough time to let this thing develop. because there's still plenty of positive signs, but it has broken some of the fast moving momentum moving averages, so it could take a little while to turn the corner, and really put together that next leg. Silver, so a lot of similarities, although to be honest, I'd say that silver maybe has a little bit more explosive upside potential. So it was a little bit, it triggered the breakout a little bit later, and it had from a percentage perspective, a much sharper move, and it's had a little bit sharper of a pullback. But similar to gold, it's above its 50-day still. It is below the 20 and the 8, but it is above its 50-day. And why I say like it still could have some more explosive upside potential is because when you go back on like uh, a longer time frame here, you can see that it's basically it broke this really like tight pennant, right? And once it has, it's been just a powerful breakout. You can see right here, right? The volume has been great during the whole move. So easily the strongest volume over an extended stretch on this since, I mean, really about the beginning of 2012, 2011. So it broke out, fantastic participation, and it really seems like there could be room into the 20s still on this. So it's been a little bit more of a higher flyer compared to gold, and I still think that there could be a lot of upside potential. So again, it has broken some of those near-term momentum moving averages, so the time frame is going to be key. So instead of like that 1 month more aggressive target, think like 2 months, possibly even 3 months. I mean, you want to let this thing kind of develop, let it turn the corner, because I still think that it's worth sticking with these trade ideas. And then GDX. So this is the gold miner ETF. And what's interesting about this is, yes, it follows gold pretty closely, but it also has some encouraging an encouraging setup, just kind of in its own right. And when I go out to like the weekly, you'll see what I mean by that. So just kind of bumped up into like this really big area of resistance around 30 to 31, right? So it's pulled back, very methodical, kind of an orderly pullback along with the metal, and it's hanging. You can see I'm going a little bit. So it's hanging right around that 8 weekly, right? And this is one where, if gold goes higher, the GDX should go higher, right? It should be dragged up with like the commodity. But this could also set up its own breakout, right? Because this is such a clean level of resistance, and if it can get through it, it could be a nice pent up move just on top of it. So you might actually be able to get like a breakout. Maybe if gold doesn't have an explosive move, the GDX, if it gets through 30, 31, it could have like a little bit of just like a pent up breakout, technical breakout on its own. So definitely one of the more interesting ETFs for like these metals, just based off like that long term yearly chart. So definitely want to keep an eye on. But again, the time frame is going to be key. It's always key with options, and with the short term momentum moving averages broken, you want to make sure you have enough time. So I'm thinking like 2 to 3 months for these trades for the potential next leg higher. All right. So questions or comments? I know we spent a lot of time going over these on Monday, but if you have anything you want to follow up with, some of these had some action yesterday in response to the Fed rate cut. So if there's anything you want to talk about, please don't hesitate to reach out. If you guys like these videos, uh, please follow up with the link below for more information on options to play, more trade ideas, and I hope you have a wonderful night, and I'll talk to you all soon.